16 minutes to 10 on 3AW. Joining us down the line is Dominic Alafaci from Collins House, 133 693 if you've got a finance question for Dom. Hello to you, Dom.
Good morning, Emily. How are you?
Good. Take us through the markets. Give us an update before we tuck into questions.
No worries. Well, overnight in New York, we saw the Dow Jones Industrial Average put on a healthy 60 points to 38,109, whilst the Nasdaq gave back 55 points, and the S&P 500 was basically steady. Across the Atlantic, London FTSE rose 1.4% on positive sentiment, with the French, German and Italian bourses all higher. Gold was steady at $2,036.60 US an ounce. West Texas was 72% or nearly 1% higher at $78.08 US a barrel, and Brent crude rose 1.43% to $83.65 a barrel. And the Aussie dollar is slightly lower against the greenback in trading this morning and is currently buying 65.77 US cents, with the ASX 200 SPY 14 points higher. That's pointing to a positive start to the week following Thursday's close, where we saw the ASX 200 put on a healthy 36 points, or just under 0.5%, to end the shorter Australia Day trading week at 7,555.
Dom, we were catching up with Auditor Nazran Daria earlier. She's trying to educate us about the superannuation changes coming in the middle of the year, the federal government's proposals. What are your thoughts on those planned changes?
Look, Emily, I am what I would say sceptical of governments breaking promises and changing tax rules. Doesn't matter what team you barrack for, blue or red. There's been too many changes to superannuation. I didn't hear the interview, but I assume she's talking about the $3 million limit.
Yes.
Look, it's probably the second worst mathematical equation I've ever had to work out, and I used to do them manually with a pen and paper back in the early 80s and 90s with the reasonable benefit limits. And look, unfortunately, with all due respect to the lovely people who live in Canberra.
Hi, Dominic. We've got a bad line for you, Dominic.
Sorry.
Go again. We've got you back.
I was just going to say, with no disrespect to all the lovely people who work in Canberra, we need a bomb dropped on the place. It doesn't kill anybody, just wakes them up to give them a taste of reality.
Maybe a firecracker, Dom.
Well, no, a nice, the nude bomb, like in Get Smart, where all their clothes fall off or something, and they go, oh, no, I'm now embarrassed. They are making rules and regulations that even, 35-year-old veterans like myself say, why are you doing this? How much revenue are you going to generate? You're confusing the blooming hell out of people. And, look, the whole financial services legislation, the Law Reform Commission has come out with a paper saying, look, it's very confusing. Too much legislation under the Corporations Act, and it's matched by completely unnecessary, complex, ideologically driven superannuation rules, which at the end of the day, what do? They just make more money for accountants and beekeepers and auditors. It's just silly.
Dominic, Peter has a superannuation question for you. Away you go, Peter.
Oh, morning, guys. I do love listening to Dominic. It's such a wealth of information. I want to pick his brains. I've just not long retired, just outside eligible for an age pension. But a friend of mine said if you put half your super in annuities, half in account-based pension, it brings your total whatever down, and you'll get a part pension. But I'm not sure of annuities. They seem such a minefield.
Yeah, Peter, look, it's a really good point that you've made, and it doesn't have to be half. It could be less, could be more. Annuities are very powerful instruments, but you need to be careful, and you definitely need to get advice from an independent advisor that knows what they're talking about. The reason is Australians hate losing their capital. So there is one type of annuity you could possibly buy, I think they still make them, that you put your money into the annuity, you get hit by a bus and $1 million go. Now no one wants that to happen unless you don't have any dependents and you don't care. There are much, much better tailored annuities that give you a guarantee of your capital, a reversion to your spouse, or a disabled child if you have someone dependent on you, an adult. So you can get much more protection And you can even change your mind to a certain extent. So after 5 years, you go, gee, I don't think I really like this anymore, and you can change it. So they have got lots of bells and whistles, and they have been unfortunately labelled for the one type of annuity, which is a guaranteed lifetime annuity with no dependent clauses and no guaranteed period. So I think they're being labelled unfairly by people who have got a vested interest. But I love them when they're used appropriately.
Peter, thank you for the call. Steve, over to you.
I just wanted to ask Dominic about the new spot Bitcoin ETFs that have come out. And, there's 11 of them. And I just wanted to get his opinion on, which one might be the best one to invest in, and where he thinks Bitcoin's going to go because of this ETF as well. Is it going to go up? Is it going to go down?
Yeah, really good question.
Let me know your thoughts.
Yeah, well, I don't like Bitcoin at all. It's a pyramid scheme in my view. There are supposedly 16 people who have the keys to the denomination on the Bitcoin. So one day, those 16 people or the 2 people who are anonymous can change the value of your investment. I'm not going to invest in it. Now, regardless of that, people put lots of money in Bitcoin, and it has had a huge impact. The exchange-traded funds, the impact of the exchange-traded funds coming in has had a huge impact on the number of investors. But just recently I was reading overnight that the demand is waning a little bit, so the fear of missing out, FOMO, has, I think, finally reached its peak. Now, the idea that a central bank is not involved in the currency scares me. The day that they actually have the bank, the Fed Reserve, the Australian central bank, the European central bank, somebody who is going to kick out the 16 people who decide, this is in Bitcoin I'm talking about, the people who can change the denomination of the investment, then I'll be very welcome, and I think it'll go through the roof. The day that they get some security for investors, I will not invest in it. I've punted it a bit myself, made a bit of money. It's very hard to make money. It's very hard to make money. It's like herding cats. But look, watch this space. Hopefully it matures and it'll be a great, because the technology's not to be sneezed at. It's significant. The technology behind cryptocurrency is significant and is worthwhile. I just fear that the major ones are very shonky. And I'm sorry, that's my honest opinion.
Steve, thanks for the call and a bit there to chew over. Dominic, I remember when all of the Bitcoin, I guess sort of what we call it, flood started happening. You'd sit in cafes and hear, tech bros and mates talking about what they were punting, or they were calling investing, but as you call it, punting on Bitcoin at the moment. There'll be plenty who would want to joust you on your opinion.
All I could say is that Bitcoin's down from $82,000 to $24,000 US. It's made its way back up to $63,000 US. So it's got another $20,000 US to come back to its peak. And once it's over its peak, we'll see what happens. But you're still 2/80ths down, which is quite a lot. You're still 25% down. If you bought it at the beginning in, say, 17, 19, say May 19, or even January 2016, I should say, you will, you've made a huge amount of money, and I hope you took all your profits out and let the rest ride.
Dominic Alifacci from Collins House will away to a break, but before we do that, a message from our friends at the White Glove Mover. Dominic Alifacci is with us. Dom, a few golden rules for investing. What's your number one?
Number one is don't put all your eggs in the one basket or the same type of basket. And diversification is the technical term for that. Everybody knows it. What it does is it unfortunately prevents you from having too much money in the next big thing, and whether that be Bitcoin, you might want to put $1 in Bitcoin and have a punt. And there's very exciting with people talking about the downturn in Bitcoin all over JP Morgan's website. And the second most important point in investing is to make sure that your returns net of tax keep in pace with inflation. That's a really hard thing to do. I was looking at our returns on some of our
I think we might have just lost Dominic. We've had a dodgy line. We've had our fingers crossed, but it's dropped out just at the bitter last moment.